I can't promise that you'll make a fortune in crypto over the next year, but with my 7 years of experience, I'll help you avoid emotional mistakes and give you the best chance at success. Crypto investing often brings out two strong emotions, fear and greed. When prices go up, it's tempting to think they always will. That's greed kicking in. When prices drop, fear kicks in and you might sell at a loss. Today, I'll show you 5 ways to stay calm, make logical choices, and maximize your potential gains. This video is the most important video I've published in almost 3 years of YouTube. And if you stay until the end, I'll be telling you how I'm using market indicators and the price of Bitcoin to help me cash out my full portfolio. And I'll be explaining why I've made some little tweaks to that cash out strategy in recent weeks. Anyway, let's get on with the video. 1. Recognizing fear and greed. One of the biggest mistakes I've seen and made is letting emotions take control of investment decisions. When prices skyrocket, you feel excited and greedy, thinking you can't lose. When prices crash, fear sets in and you might panic sell at the worst possible time. This is the fear-greed cycle, and it's powerful, or painful, should I say. Here's a personal example. A few years ago, I held onto a meme coin for too long, hoping it would keep climbing. Greed kicked in. I invested £2,000 at the start of March 2021, and 6 weeks later, it was up £68,000. When it started dropping, I froze and held on for too long, eventually selling at a loss. How can you recognize these emotions before they take over? A good tip is to pay attention to the news and social media. If everyone's talking about crypto and friends are suddenly interested, that's usually a sign that greed is high and a correction may be near. This might be a good time to sell some of your cryptos. On the other hand, if every headline is negative and people are calling crypto dead, it might be fear-driven and a buying opportunity for you as an investor. By learning to recognize these signals, you'll develop an ability to stay calm and logical, even in extreme market conditions. It took me a good few years to recognize these signals. If you want to get there faster, you can join my crypto community on School. You get access to crypto courses that will help you to buy crypto safely, store it safely, help you to build a well-researched portfolio, and help you to decide when the right time to sell. Most importantly, you get around other crypto investors that will give you the help and support you're going to need, that will help you to recognize fear and greed. 2. Identifying trends. One of the most basic skills in technical analysis is identifying trends. Trends help you to understand whether the market is generally going up or down or sideways. Think of it like swimming in a river. It's easier to swim with the current than against it. In crypto, you want to invest with the trend. There are 3 main types of trends: uptrend, downtrend, and sideways. Uptrend, prices generally rise over time with higher highs and higher lows. Downtrend, prices generally fall with lower highs and lower lows. Sideways trend, prices move within a range without a significant upward or downward movement. To identify trends, traders use candlesticks, which show how prices move over a specific period, like 1 day or 1 hour. Each candlestick shows the open, high, low, and close price for that period. By tracking candlesticks over time, you'll start to see patterns. Green candles, when the price closes higher than it opened, indicate upward movement, and red candles show downward movement. Common approach is to look at trends over different time frames, like daily, weekly, and monthly. For example, an uptrend on a daily chart might just be a minor rally within a larger downtrend on the weekly chart. By combining time frames, you get a fuller picture of where the market might be heading. As you can tell, this video is giving you an overview of technical analysis. My intention is to help you to recognize where we are in the market cycle so you can make your buy and sell decisions accordingly. This isn't financial advice. Nothing in this video or on this channel is financial advice. I'm just helping you with my experience as an investor. And because technical analysis is important, is something I'm really focused on, I wanted to share with you what I'm looking at. Don't worry though, it will all come together by the time we get to the end of this video. 3. Support and resistance. Support and resistance levels are like invisible barriers where prices often bounce off either up or down. Understanding these levels is crucial because they can help you predict where prices might reverse. Support. This is a level where a price often stops falling and may start to rise again. Think of it as the floor for the price. Resistance, this is the level where a price often stops rising and may start to fall. It's the ceiling for the price. For example, if Bitcoin has repeatedly bounced off $60,000, then 60,000 is a support level. If it has struggled to break past 70,000, then 70,000 is a resistance level. When prices stay between support and resistance levels, they're said to be in a range. Trading within these ranges can be profitable as prices tend to bounce up and down within the limits. If a price breaks through a support or resistance level, it often signals a larger move in that direction, known as a breakout. By learning to identify support and resistance, you can make more confident buy and sell decisions. If a coin is nearing a strong support level, it might be a good buying opportunity. If it's approaching resistance, it might be time to take some profits. 4. Psychology and patterns. Crypto markets are driven by crowd psychology. When a lot of people believe the price will go up, they buy, pushing the price higher, and vice versa. If this happens and the price is going up, you know the bulls are beating the bears. Chart patterns are visual representations of these beliefs and can give clues about what might happen next. A simple way to start with patterns is by learning trend lines. By connecting a series of highs or lows, you can draw lines that show the direction prices are moving. For example, an upward trend line connects a series of rising lows. A downward trend line connects a series of falling highs. Trend lines can act as support or resistance. If prices bounce off a trend line multiple times, it suggests that the trend is likely to continue. However, if prices break through a trend line, it may signal a trend reversal. Other common patterns include triangles, flags, and head and shoulders. These patterns represent specific behaviors in a market and can hint at future price moves. Mastering them takes practice, but even as a beginner, you can start spotting the simpler ones to make more informed investing decisions. Before we go any further, I just want to stress that I'm not a trader. I'm a long-term investor, and I'm simply using technical analysis to help me maximize my crypto profits over the next 12 months. There is no guarantees in this space, and that's something we have to accept as investors. All I would say is that reading books, watching YouTube videos like this one, listening to podcasts, learning all about market indicators like moving averages, what we're now moving on to, all of this is going to greatly increase your chance of getting them huge potential game-changing profits. Here's a little tip that I feel will help you as an investor. In crypto and anything else you choose to invest into, read The Psychology of Money. Brilliant book that I feel will help you to remain calm and neutral. And from experience, that won't be easy, as crypto bull markets get very, very emotional if you're not careful. But again, this book will help in my humble opinion. 5. Moving averages. This is my main tool I'm going to be using to help me with my cash out plan. I think it's a really good tool and it's nice and simple, which suits me as an investor. I don't really want to learn how to read daily charts, if I'm being honest. I just need to know the general direction of the market so I can sell and take profits off the table. Moving averages help smooth out price data and make trends clearer so you're not distracted by every minor price movement. They show the average price over a certain period, which makes it easy to see where prices are heading. Two popular types of moving averages are simple moving average, SMA. This is the average price over a set number of days, e.g. 50 days. It's straightforward and gives a broad view of the trend. Then you've got exponential moving average, or EMA. This one gives more weight to recent prices, so it's more responsive to current movements. Many crypto traders prefer EMAs because crypto markets move really fast. A common strategy is to track the 50-day SMA, short-term trend, and the 200-day SMA, the long-term trend, on a daily chart. If the 50-day SMA is above the 200-day SMA, it suggests an uptrend. If it's below, it suggests a downtrend. This is known as a moving average crossover and is often used as a buy or sell signal. If the 50-day crosses above the 200-day, this is a golden cross and suggests bullish momentum. But if the 50-day crosses below the 200-day, this is a death cross and is bearish momentum. This will be my main focus in the current bull market, but I will be using the 9-day EMA and the 34-day EMA as an additional tool. Plus, I'll be keeping an eye on volume and RSI, relative strength index. If you want to know more info on volume and RSI, ask below in the comments.
So looking at the Bitcoin weekly chart, these two lines are SMA, simple moving average. You've got the 50-day, which is the red, and the 200-day, which is the green. Going back to January, we had a golden cross, which is when the 50-day trades above the 200-day. I'm using the SMA, but I'm also using EMA, exponential moving average, and I'm using the 9-day and the 34. Now I want to go back 4 years, so let's look at October 2020. As you can see, Bitcoin's again trading above the 9-day EMA, and this is really bullish. So it suggests an uptrend. As you can see, we've got loads of green weekly candles, and this Bitcoin traded above the 9-day EMA right up until April 2021. Is this going to happen again? Are we going to see Bitcoin trading above the 9-day EMA, which is really bullish, from now all the way to April 2025? This is the question I'm asking myself, and I'm looking at this every day. I'm looking at the weekly chart, I'm looking at the daily chart, I'm looking at EMA, SMA, I'm looking at RSI, relative strength index. Now, anything above 70 suggests it's overbought, so it's something to be aware of. And then I'm also looking at volume. What are you looking at in terms of moving averages, market indicators? Let me know in the comments below.
By using moving averages, you get a better sense of whether a trend is likely to continue or reverse. They're not perfect, but they do provide a helpful, clear indicator to add to your crypto toolkit. So after this video, you're going to have an idea of when to sell, or should I say, you'll have some useful tools to use that will help you decide when to sell. But your problem is you don't know how much to sell and when. Now, there are a few different strategies you could use, like taking out your initial investment and then you're playing with the house's money. This is risk-free. If you want to learn more about different profit-taking strategies, see below for a video that's got you covered. So I promised you my cash out strategy at the start of the video. So here it is. Basically, when the price of Bitcoin hits $100,000, I will cash out 50% of my portfolio. I know this is very basic, but I wanted a simple plan to remove the risk of messing things up. This was my plan until recently, but an investor I've been following for the last few years has changed my mind slightly. That investor is Raoul Pal, and he has serious credibility as an investor. Anyway, if you want to know a strategy that Raoul Pal suggests, see below for a video I published just a few weeks ago. It's quite similar to my cash out strategy, but I would say it's more incremental. This, in my mind, will give you a good idea of when to cash out. Crypto investing can be emotional, but technical analysis helps you to stay grounded. By understanding fear and greed, trends, support and resistance, psychology, and moving averages, you'll be able to make more informed investing decisions and avoid the common mistakes that many investors make. Hopefully, you've taken value from this video and it helps you as an investor. Hit the like button and subscribe for more content just like this. And good luck with your investing. And hopefully me and you will make some decent profits over the next 12 to 18 months.